All right, this is Bruce for FXCOINZ, taking a look at the major indices because they're all giving similar bearish signals and confirming each other. So starting with the S&P 500, on the daily chart we could see that it topped out back here in early March on a break through the light blue 100 period simple moving average, or the 100-day simple moving average, fell down to support of the blue 200-day moving average, which it broke down through that on last Thursday, and then retraced back to test it as resistance on Monday, leading to Thursday's sell-off to a new trend low. That puts it in the area of the center line of a rising parallel trend channel, but also at risk of falling down to the 38.2% Fibonacci retracement around 6,174, and prior highs become potential resistance around 6,147. Moving on to the Nasdaq-100, something similar happened. A month earlier, it broke down below the 100-period a simple moving average, and then recently broke below the 200 and pulled back, tested as resistance, and now has signaled a continuation of the bearish trend, and it broke below the prior swing low. If we go back to the S&P, I don't think I mentioned that, but also that happened, a break below a higher swing low that violates the integrity of the uptrend. That is a bearish signal. So on the Nasdaq, then, we have a target zone down to 38%, and this prior high, similar to what we see in the S&P. So the 38.2% retracement down here at 22,441, and the prior highs around 22,133, creating a nice support zone. So since we have some support zone, we have a minimum fib retracement on both of those major indices. It very well can act like a magnet, and we could see an acceleration to the downside, therefore. Moving on to the Dow 30, US 30 symbol, we could see that it's a little bit ahead of the curve in one way, in the sense that it's already reached the 38.2% retracement zone, bounced off it, and the prior highs. So from that way, it's a little bit further ahead, but in regards to the 200 moving average and the 100-period light blue moving average, we have a similar pattern playing out, although the top is a little different. A break below the 100-period moving average, followed by a break below the 200-period moving average, and then a pullback to test it as resistance, and then a turn back down, but it's not on the way to quite breaking through the lows just yet. So that leaves all three moving averages in bearish positions for continuation to the downside. Now, you saw, especially on the S&P and the Nasdaq-100, the downside can be a bit more considerable than maybe what we're seeing in the Dow, which is kind of maybe going to stall around this level a bit before it's ready to go and test the next lower level around the 50% retracement at 43,507, if that is what's going to happen. All right, that is it for the U.S. indices. Have a good week.